Welcome to the Old Capital Real Estate Investing Podcast with Michael Becker and Paul Peebles. During this program, you will hear interviews with real-life successful investors who will share their stories and provide useful advice on how to acquire, finance, and operate apartment complexes. Now, here they are, Michael Becker and Paul Peebles.
Welcome to the Old Capital Real Estate Investing Podcast. I'm your host, Paul Peebles, National Underwriter for Old Capital. And joining me today would typically be Michael Becker, but Michael's not with me today because I'm in Austin, Texas, enjoying the beautiful weather of springtime in Austin, Texas, and seeing what's going on down in the Austin apartment market. So today in the podcast, we have a friend of ours that we've known for a long period of time, a gentleman named Bob DeLong. Bob DeLong. And Bob has been an apartment owner for a number of years, and he's going to talk to us a little bit about his journey about kind of being an engineer, being a guy that has been pretty physical, hands-on type of guy who made a transition into the apartment industry to be an owner. And what he's telling me, what I just heard right now, is that his daughter has joined him. So it's kind of a family business of owning apartments. So welcome to the podcast, Bob DeLong.
Thank you, Paul. It's a pleasure to be here. I'm very honored to share my experience with you.
So we're down in the Austin area. So I thought we'd kind of talk a little bit about just your perspective, your opinion. How's the Austin apartment market specifically doing these days, do you think, Bob?
The Austin market is incredible, especially in the Class C area. Mm-hmm. The demand outstrips the supply significantly. Rents are going up, and occupancies are in the 90, 97, 98 percentile.
That's absolutely crazy, isn't it?
It's insane. It's insane. I also have a property in San Antonio. San Antonio, a lot of people say it's the next Austin.
Yeah.
But it's not nearly as strong when you really look at the demographics and the number of people moving into the area.
So let's kind of go back to square one. Tell us a little bit about how you got into this business. So kind of walk me back a little bit about what you did prior to get into multifamily.
Okay. Well, it's a long story, but I'll make it short.
Sure.
Grew up in Detroit, in the boom times, 50s and early 60s.
Yep.
Moved on, started college just like everyone's taught to do, and wasn't really doing that well. So I ended up being drafted, went in the Army, came out, finished my college at Michigan State University. Got out of college, of course, wanted to work in the automotive industry or some related industry in Michigan, mm-hmm. just like every other Michigander wanted to do, but the economy was terrible. So I researched and ultimately went to the next boom town in the United States, which was Houston, Texas. And so I lived there and worked there in the engineering and construction business for probably 35 years. Mm-hmm. I made a little short trip to Colorado. Ultimately was looking to retire. My wife and I, we've always scrimped and saved our whole life. Had a pretty nice 401k and IRAs and all that sort of stuff. But when I really started researching it, it became pretty obvious that to live the lifestyle we wanted to live, mm-hmm. We needed something more than just our 401k. And the thought of drawing out my money rather than putting it in the 401k was very frightening to me. So I searched for a way to get some passive income.
One of the things I read, I think last week or 2 weeks ago, there's a book that's out called Fed Up. And it was written by Danielle DiMartino Booth, and she's a friend of ours. She used to be with the Federal Reserve. She's kind of telling her story, at least her mother's story, with these interest rates that are getting crushed and are so low. It helps us on the lending side, but the people who have income that's tied to savings accounts or fixed income type of things, is that she was saying that it took $10, $11 million to get if you got a 0.5% rate of return on your money, and that was only making you about $13,000, $14,000 a year, you were still below the poverty line on owning a safe investment. So you'd have to have $10, $13, $14 million just to make any type of rate of return. So having fixed income is not perceived as a risk-free way is not the right way of doing it. So I can see getting on towards retirement to try to turn your big pot into something that's risk-free can be the wrong thing to do. So sorry about that. Keep telling the story.
Yeah. Well, just to expand on that, nowadays retirement is probably 20 or 30 years.
Yeah.
And so, in the years where they devised this system, it probably made sense. You probably lived 5 years, you used all your money, and you were gone. Today, to live on that, it's just impossible.
Well, for us older guys, since I've done this for 34 years in banking, thank God they have the new medicines. We are going to live.
That's right. That's right. And I'm very thankful for that, by the way.
So how did you go from investing in 401ks to maybe think about making an adventure into investing in apartments?
Yeah. Well, about that time, I was listening to the radio and a show came on from Lifestyles Unlimited, a mentoring group that teaches you how to do real estate.
Uh-huh.
And so I followed up on that program. They had a 2-hour session. We listened to it. We were very skeptical that it would really work, but we joined at the lowest level. And then we went to their 2-day seminar, which was basically you were paying for the 2-day seminar.
Sure.
Well, coming out of that, it sounded great. It made sense, but still being the skeptical that I am, I decided, well, I'm going to tiptoe into this and I'm going to make some small investments and see how it works and really understand the program. And so I started getting into it, and the further I got into it, the more I realized that this was the real deal. So I think I invested passively in multifamily properties for about 4 deals. And at that point in time, I had enough cash flow that I felt very comfortable retiring.
Yeah. Did you ever get into single family?
I never did get in single family. Years ago in the 80s, I had a couple single family deals in Houston, which always turned out well.
Yeah.
But that wasn't my focus. My focus was really on cash flow.
So cash flow was king. So you went to this mentoring group. You learned a little bit more. They're an educational group. They have an office in Houston, but your office that you worked out of was the one in Central Texas, and that was out of San Antonio. And I guess they have an office up in Austin too.
Yes.
At least now they do.
Yeah, and one in Dallas as well, I think.
In Dallas also. So you affiliated yourself with a mentoring group. So do you think that was, looking back right now, do you think that was a positive thing to do, or do you think you could have done this by yourself?
That was the game changer.
It was?
It really was. Educating yourself in multifamily real estate, it made all the difference in the world. I could never be where I am today without having done that. It would have taken me decades to learn what I learned in a very short period of time.
So let's talk about the first transaction that you got into that you were the lead, because you said to me that you also were in passives in a couple of transactions.
Yes.
And that just means that you threw money into somebody's transaction that they were the managing member and you were just a passive investor. So they were the captain of the airplane and you were just one of the passengers sitting in the back seat. Now you did a couple of those type of transactions and you kind of figured out that model worked. And you said, hey, listen, I want to move from the back of the airplane to the captain's spot. How'd that go? Tell us about that first transaction.
Yeah, and just to clarify, so I got in 4 of these passive deals.
Okay.
And then I retired. Okay, now I am still actively in passive deals with other leads.
Sure.
And at the same time, I retired. I sat on my deck for maybe 2 or 3 months drinking coffee or maybe something a little more stimulating. But after a while, having worked in engineering and construction for so long, that wasn't enough for me. So I almost kind of backed into this. I'm kind of anal, so I like evaluating deals.
Okay.
So as part of the passive part of me, I like to evaluate the deals that I'm going to get into.
Yep.
So my challenge was always to break the deal. If I could break the deal, then I talked myself out of it and I didn't want to get into it, So in doing that, I was started looking at deals from a lead's perspective. And ultimately, I came across a deal I could not break. So I had to buy it. And this was a small 52-unit property in South San Antonio. It's a very unique property in that 48 of the 53 units are 3-bedroom.
Huh.
So we have 53 units now. I added another unit.
What year was the property built?
The property was built in 1989.
Okay, so a fairly new property.
Fairly new property. It was a great price. It had about 50% of the residents were Section 8 residents.
Because of
government.
Because of the 3 bedrooms, they like that?
Probably because of the 3 bedrooms
Yeah.
and because of the management company before me.
Is that how you have it right now?
No, now we do not allow Section 8 residents. At least we are not taking new Section 8 residents.
Sure.
And about 50% of those residents have moved out.
Okay. And now, do you have a third-party property management company that manages the property, or do you manage it yourself?
I manage the property myself. I have a full-time property manager on site.
Okay.
And I also have a full-time HVAC certified maintenance guy.
No kidding.
Yeah.
So did you start that out of the box that you self-managed, or did you kind of have a management company that kind of set the table for you, and then you kind of took it over?
Yeah, being a hands-on guy, I started right out of the box. The interesting part about this property is, it's 52 units.
Yeah.
Usually you're limited on your staff
Sure.
on a 52-unit property. But the fact that it's 3-bedroom means that the revenues are like a 75-unit property.
Mm-hmm.
And so it gives you a little more opportunity to have a larger staff, to spend a little more money, have your expenses to go up.
And how difficult is it to manage from, like, you live up in Austin, the property's down in South San Antonio, so it takes you, about an hour and a half to get down there?
Takes 2 hours door to door.
And how many times are you down there on site looking to see what's going on?
Again, being an anal type of guy, I'm probably there once a week.
Wow.
now.
And then do you guys have your own software? Do you buy software from a vendor? What kind of a software package?
Yeah,
do you
we
guys
have a property management software.
Uh-huh.
And of course I can see from my house everything that's going on at the property.
Do you have cameras in the property too?
I do not have cameras.
Have you thought about cameras at all?
I have thought about cameras.
Yeah.
And, we call them courtesy cameras rather than security cameras.
Sure.
But I really don't, I haven't seen the need.
Yeah, because it's
Yeah.
fairly.
Yeah. Oh, it's located next to the police station.
So you have plenty of security cameras next
Yeah.
door.
Yeah, although it still takes them 20 minutes to get there if we call them.
So now, on a property like that, of that size, you have a leasing agent on the property, or do you have a tenant that leases for you?
Well, no, I have a property manager,
So you have a,
full-time property manager.
and they're on the property. Are they a tenant too in the property?
No, she's got 20 years experience. I mean, she's worked mostly smaller properties.
Yeah.
She has a lot of experience. She handles all of the daily duties, responsibilities for leasing.
Wow.
She manages the maintenance guy. She deals with the residents, collects delinquencies, does evictions.
Bob, that's great. And there's not too many times that a smaller property like that can have a property manager on site, have a maintenance person attached to the property. It's just that the economies of scale just don't dictate it. But just like you said, the 3 bedrooms does give you additional revenue. So it does give you the ability to have somebody that you can hire, maintain and watch your property and oversee it. So that's great. And I like that you're close to the property. So tell me a little bit about, how did you finance that transaction? Did you sign on any type of loans before, or was this your first kind of loan out of the box? Tell me a little bit about how that worked.
Well, I had obviously bought personal, homes
Yeah.
to live in, and I had a couple of rental houses years ago, but that played nothing into this. Actually, the emphasis that we've been taught is to build a team.
Yep.
And so one of the team members was, lo and behold, Old Capital.
Okay.
And so right out of the box, I talked to David Walls at Old Capital.
Yep.
He pretty much advised me on what I was able to do and what sort of property I could buy as a first-time buyer. He held my hand throughout the entire transaction. It was really good. I had a key principal or a guarantor that had a lot of multifamily experience. And with that, we were able to do a Fannie Mae non-recourse loan on my very first property.
Wow. Right out of the box.
Right out of the box.
Pretty good. And,
Yeah.
And why did you like that type of loan?
Well, I liked it, first of all, because it was 30 years.
Yep.
It was, I think, if I remember correctly, about 84% loan to value.
Loan to cost.
Yeah.
Okay.
And it also...
So it took the acquisition price plus the rehab and times it by, say, 80%. And then after all the work had been done, you could throw some money in for
rehab
into the property and some closing costs too. So you got some at the highest leverage you could get. You got it.
Yeah. And most of all, it was non-recourse.
Non-recourse. Was it fixed for 10, 12
It
years?
was fixed for 10 years
Okay.
with a 30-year amortization.
Amortization. Okay.
Yeah.
Well, good. So that worked out for you. And again, how long ago did you buy that property?
That was about 2 years ago.
Okay. And so are you going to keep this property? Is this just a kind of little cash flow generator? Are you thinking about selling it at some period of time?
It is a cash cow. I've more than doubled the NOI since purchase in 2 years.
So you raised rents or kept the expenses the same. And how did you do that?
Well,
A little bit of the market? A
lot the market,
Yeah.
you could argue. But, one of the pieces in the evaluation that we did, up front,
Yeah.
we realized the rents were lower than the market rents. We increased other income by over 400%, largely in the allocation of utilities to the residents.
So the landlord was taking care of utilities for the previous ownership group, and you brought the utilities from having you be responsible for the tenant to be responsible for it. Is that right?
Yeah, he was at about 30%,
Okay.
and we raised him to 90%.
Okay.
There's no amenities on the property at all other than we put 2 playgrounds in for the 250 children that are currently on the property.
Wow. It's really a family atmosphere.
Very family
atmosphere there.
Yeah,
That's great.
yeah.
And so do you remember what on a per square foot basis, what your income was coming in and what it is right now?
I don't remember on a square foot.
Yeah. Maybe 90 cents a square foot up to maybe 125.
Something like that. Yeah.
That to me would make sense.
Yeah.
A 3-bedroom.
It was probably more like 80 versus 100
Yeah.
now,
Wow.
or $1. Yeah.
Yeah. 100 pennies per
Yeah.
square foot. I
Yeah.
get it. So you've done very well on that property.
Yeah.
It's next to a police station. You go to see it once or twice a week if you happen to be down there.
Mm-hmm.
And did you paint the property? What type of things did you do on the rehab of the property?
We did a lot of rehab, about $200,000 worth. The bulk of that was in interiors. So every time a unit turns, we go in and we do a major upgrade, which means new flooring, new paint, two-tone paint, new fixtures. We use brushed nickel fixtures, doorknobs. Basically we fix everything and upgrade the unit and then move in a new tenant.
That's great.
It's called a concept of best product, best price.
Yeah. So you've done very well on that property. You bought it 2.5, 3 years ago. Second transactions are sometimes difficult to find. Let's move on to transaction number 2 that you acquired. And how did you find that? And tell us a little bit about that transaction.
Just backing up a little, you asked me what I plan to do with the property.
Yep.
Okay, well, we just refinanced it
Okay.
with the help of David Walls again.
Okay.
And we returned 110% of all of the investors' contribution in the property back to them.
Wow.
So we've now returned, with all things considered, we've returned about 160%.
Was that a
of their money
supplemental
back.
loan?
That was a supplemental loan.
So
yes.
so you have a first lien that you originally had taken out back 2.5 years ago. You pushed up NOI as high as you could get it. You came back to Dave Walls at Old Capital. Dave did a second lien against the property and pushed back to you. How much again?
110%.
110%. So people pretty much have gotten all their money that they put into the
Right.
deal, and now it still kicks off like a broken ATM.
It does. It does. It just every quarter
So
it cash flows.
Your investors are happy?
My investors are pretty happy.
Fantastic. Good. So anything more on that first transaction?
No,
let's go to the second transaction. How did you find that deal?
Okay, and that's another interesting story. I was a passive investor in this property
Okay.
for 3 years, and it was in Austin, Texas, which is an incredible market.
Yep.
Class C property,
Uh-huh.
cash flow monster.
Yep.
So the lead, after 3 years, had decided to sell it.
The managing member decided to sell it. So he was the captain of the airplane. You were just sitting in the back seat.
I was sitting in the back seat just collecting the quarterly payments.
And then all of a sudden you saw that they were thinking about selling it. And you said, hey, listen, if you're selling it, I want to buy it.
I didn't say that. I thought immediately there is no way I would want to buy this because I'm an investor.
Yeah.
I want the absolute most I can get for it.
Right.
So at first I was skeptical that I could pay that for it.
Sure.
So he actually had a buyer right out of the box. In fact, that's why he decided someone had made an unsolicited offer for it.
Mm-hmm.
Having done that, he was ready to sell it. But then shortly thereafter, that buyer backed out. And so at that point, it occurred to me, well, maybe I ought to look at this deal at least.
Sure.
So I made an offer and others made offers and I still didn't get it. I was like second in the offering. I think the guy that came in first was offering more upfront money.
Uh-huh.
So ultimately he backed out and so I got the deal.
No kidding.
Yeah.
So talk to me again. What year's the property? How many units is the property?
The property is 182 units. It's
That's 4 times plus the size of your first deal by yourself?
Right,
Wow.
right.
That's a big jump.
Yeah, it's 182 units. It's actually 2 properties that were combined at one point in time,
Wow.
right next to each other.
Okay.
It's a Class C as well.
Yeah.
It's got a very good mix of units, everywhere from an efficiency all the way up to a 4-bedroom.
Yeah. So when you were going through feasibility on that property, was there anything that you found that you needed to get fixed or repaired on that property that it was good for the seller, but maybe wasn't so good that you wanted to take it over in that condition? What were some of the things that you found?
Well, there absolutely were. Ironically, you would think, being a passive member in this deal previously for 3 years, that I would know a lot about the property. Well, I had visited it one time. So anyhow, I kind of assumed it was in good condition and everything, and it generally was. But at the same time, during my feasibility, I do inspections. We walk the units, the major mechanical items and such, we do inspections. So during one of those inspections, we realized that the roofs on half of the property needed to be replaced. And so ultimately, over the course of the negotiations and such, I received a pretty good cash at closing rebate of $200,000 to help me with the roofs.
Was the seller hoping that it would hail again in the meantime?
I think and the funny thing about this deal, I was on both sides of the deal.
So that's the biggest thing that we're in when you're in negotiations for the contract and there's a roof issue that comes up, because hail is such a big problem in the state of Texas, especially, is that our insurance costs are higher because of hail and the impact that hail can have on rooftops, and where it may hail today, it may not hail for another month or 2 months or 3 months, but you may have to get that roof replaced or repaired, and you do an old dance to get the hail to come through to replace that roof, so the insurance company pays for it instead of the seller or the buyer paying
It
for
would have been really nice, but there was no hail.
No hail.
Actually, it hailed in San Antonio instead of Austin.
So tell us a little bit. You assembled a separate group from the one that was selling the property that you were part of. You assembled a group. How many limited partners did you have in that deal?
We had 39.
So 39 partners.
39 partners.
And the guys that were in the front of the airplane you were the captain, and how many other co-pilots or first officers did you have?
I had 2 KPs.
So 2 KPs.
Yeah, key principals.
Key principals in the cockpit to kind of help you.
Mm-hmm.
But you are definitely the captain. You're the one that's responsible to the partnership about the performance of the asset itself. Are you managing that property yourself, or do you have a third-party property management company do it?
I am also managing that property.
So it sounds like you got the blessing from the first Fannie Mae lender that you were doing a good job, and then they said, well, now this is a much larger property. Since you've done a good job on the last one, we'll give you the benefit of the doubt that you can do this one. Because typically they're going to want to have a third-party property manager for an asset that size.
Yeah. And one of my KPs, actually both of my KPs, are very experienced multifamily leads as well with management companies. So one of them oversees what I'm doing.
Good. So a
and
second set of
follows
eyes.
up on it.
Second set of eyes.
Yeah. And we meet, once a quarter and make sure that everything's going straight. And he gets of course, he's an investor in the deal as well.
Yeah. So that property closed. And how's that property doing these days?
That property is doing phenomenal.
You were maybe a little bit worried when you were selling it, thinking it cannot do this much better in the future. But what are you telling me? Are you telling me that it's doing much better?
Well, it's exceeding all of my expectations. We obviously had a lot of rehab. We had $800,000 worth of rehab. So I was there virtually every day for the first 4 months, along with my daughter, working through the rehab items, the roofing being the biggest one. So we've completed that now, and it is cash flowing since day one. We've actually made our first distribution and are getting ready to make our second quarterly distribution. The rents are going up, just as you would expect in Austin.
Yep.
Probably an average of $50 per unit. And we're following the same model we followed with the first property. We're upgrading each unit as it turns and moving in new tenants at market rent.
No kidding. So let's just take a turn out real quick here. You said something about your daughter, and we talked about it at the beginning. Did she come with you at the beginning of getting into this mentoring group, or did she just come in seeing that the success you've had and the fun that you've encountered? Tell me a little bit about what your daughter's job these days, and how does she like doing it?
Okay, well, she didn't start out with me on my first property. I think over the 3 or 4 years that I've been investing in multifamily, she watched very carefully. And a little ways into that, her and her husband decided to research, very similar to what I did, the mentoring group that we had joined, and she joined. And she actually joined as, they both had jobs.
Yep.
They were very successful in their jobs, but they realized, hey, this passive cash flow looks pretty good.
Yep.
So they got into it. They kind of followed the same route that we took. I think they got into 4 passive deals. And as I was preparing to buy this new property, I thought, boy, I could sure use some help with this, So I went to her, and she was wild about the idea. And she is just like me. She has a lot of the same traits that I do, and we work very closely together. We have a great relationship.
So it's made you closer?
It has made us closer, actually.
That's great.
Yeah. She thinks like I do. So I pretty much turned over half of the rehab to her, and she is doing a lot of the property management that I would normally have to do.
Still have her job?
No, she left her job. She is basically retired.
No kidding.
Yeah.
Well, good for her, and good for you to be able to have a relationship with your daughter that's been the benefit of working together.
Yeah. It's probably the most rewarding aspect of all of this to me.
That's great.
Is to see my daughter being a success and being her own entrepreneur.
That's good. Anything else on that property or project that you want to bring to the attention? Is there anything else that you would want to disclose? Or
Can't think of anything right now.
So let's talk a little bit about what's going on in the market. Whether you're a limited partner or a managing member, what as a limited partner, a passive investor in some of these deals, what type of rate of return are you looking for in a transaction, would you say?
Well, we typically look for, I would say in today's market, probably 8 to 10% to start out.
So a cash on cash?
Cash on cash return.
Okay.
And, we're very conservative in our approach.
Yeah.
So ultimately, it's probably more than that. But what I typically tell potential passive investors, that is probably what you can start out making on a multifamily deal.
And as a passive investor, what are you looking for when you, not only are you a lead, you kind of have a dual role, because you are a lead on one side, but then you're a passive investor on the other. When you were a passive investor, what were you looking for in the lead for the reason why you invested the money?
Yeah, well, the first thing you're looking for is someone with integrity.
Yeah.
Next, you're interested in their communication skills. And to one degree or another, what sort of history they've had with multifamily or with their previous position. Like in my case, I was a project manager for an engineering and construction company. So that a lot of those skills in people management, I worked a lot with software. I worked a lot with contract management and that sort of thing.
Yeah.
So a lot of the skills that I used in my career, I just moved perfectly over into.
You're a problem solver.
That's exactly it.
Yeah. So when you found somebody that has the integrity, you always want to validate that integrity. Would you look at their personal financial statement, or and then the other question is, did it make a difference whether they have never done a deal before? Would you still invest in somebody that may have not been the lead before?
Well, I get to know them.
Yeah.
And I get to know what they're about, what their real motivations are, and that sort of thing. Now, the final thing that I look for is they've got to have skin in the game.
Yeah.
If they don't have skin in the game, that's a huge red flag, and I will probably not invest with them. In my case, I am always the largest investor.
Mm-hmm. Now I want to reverse the hat. You're the lead these days. You're the managing member. You're the captain. What are you looking for in limited partners these days?
Well, first they have to have money.
That's always good. Very good.
And there's SEC rules for accredited investors versus just sophisticated investors.
Right.
So you want that. Other than that, I try to get to know them to one degree or another. I'm looking for someone that is looking for a lead with the qualities of the lead that I just stated.
Sure. And then being a lead, tell me what your typical week looks like. You're at one of your properties for a full day. You go to another property, you're at the other property for a full day. Tell me, what do you do as a lead?
Yeah, as a lead, I actually don't spend a full day at the properties.
Okay. I
spend probably about 3 hours. Now, it might take me 2 hours to get there.
It's a drive.
Yeah. We have a set agenda for what we do when we go to the property. And we have a meeting, and it includes at least a portion of it. It includes the full staff.
Yep.
But by and large, I'm dealing with the property manager, and I expect them to be able to address all of the items on the agenda. Those being, delinquencies, vacancies, occupancy, goes all the way down to maintenance items. And I also like to walk the units that are vacant, just see where we are in doing the upgrades and that sort of thing.
Because you're being the managing member, you have the direct relationship to the limited partners, the people that have invested in the deal. You're responsible for them. And so you have to be a great communicator of what's going on. So you have to eyeball and see what's going on, which you're a great communicator. So you do a good job with that. Tell me a little bit about, we always talk about good things that go on in multifamily. Tell me about some of the challenges that maybe you didn't realize getting into this business that you have found. Has there been any challenges, whether it's been tenants or it's been, without naming names, any challenges that's been in this business that you've found that you didn't know going into it?
Well, I think there's always challenges. Trying to think of one right now. There's the primary challenges, I would say, at least for an owner like me, are the people.
Yeah.
The real estate, in effect, is pretty simple.
Yeah.
I mean, you follow the model, you follow the rules. I mean, you manage the financials, and you look at the trends. But dealing with the people is always a challenge, and I'm speaking more of the employees, at least in my case, than the actual residents, because the property managers are dealing with the residents. Occasionally I'll get into discussion with them on how to do something, But for all practical purposes, my residents don't know who I am.
And you don't want them to know who you are.
No.
You're the insurance company, you're the city inspector, you're the guy who treats the property for bugs, but you don't want them to know that you're the owner.
In the worst case scenario, I'm at least in a position where I can step in if I need to.
Right.
And be the referee or whatever.
Yeah.
But typically, I'm pretty much a non-entity to my residents.
How about funny stories? Any funny stories that you can think of that are pretty clean that since you've got into this crazy
Well, I had a
multifamily-
funny thing happen the other day. I went to my Austin property, and I was, like I said, when I go there, I like to walk the property, And as I was walking out the door, my leasing agent said to me, "Don't worry. I've told them they have to get rid of the trampoline." And so, I closed the door, and as I'm walking through the first area there where we have a big open area with a lot of trees, I see this trampoline with about 25 kids on it. And apparently over the weekend, one of the residents decided they were going to just put up a trampoline on the property with
We won't mention that to your insurance company that there's a trampoline on the property.
But I did learn.
It's gone.
It's gone now.
Yeah.
But
now that's funny. I have not heard that story that all of a sudden you find a trampoline on your property and another amenity that's should not be there.
That's right. And, there's usually the funny things that happen aren't so funny when you first hit them, there'll be a resident where their power had been turned off, and there'll be an electrical cord from another residence.
That does happen.
That's not very funny, but when you look back, it is.
So if you were looking back to, say, yourself or somebody that's looking just to get into the business back 3, 4, 5 years ago, any good advice for somebody that wants to get into the business, whether they want to buy a 52-unit building or a 300-unit building? Is there any good advice that you'd have for them?
Yeah, I would say find a mentoring group. I mean, it doesn't have to be the one that I found, but there are many throughout the country that can teach you how to do real estate. You can talk to other investors. And one of the first things you're going to want to do is you're going to want to get with a broker like Old Capital and find out what it takes and how you can start on this journey.
So you would say that being part of a mentoring group and having team members was definitely an advantage.
That's critical
for you.
Yeah. You cannot do this alone.
You probably don't have, you have self-confidence, but you don't have the group that supports you, that tries to keep you out of jail, whether that's your attorney tries to get the loan closed, which is your lender, as an advisor, whether it is doing physical due diligence, whether it's a property management company that's going to do that for you, engineers or electricians. It is a team approach, and it's a team sport. It may not be a fair team sport because you may want to go out and acquire a 100-unit building, but that property or inventory may not be there right now. But still stay in the game because it'll come around. Mm-hmm. It's been kind of tough. What's your game plan right now? Are you out there looking for another deal?
Well, you might say I'm always looking.
Yeah.
I haven't been feverishly looking, largely because we're waiting on this baby to arrive.
The granddaughter.
I don't know if we even mentioned this but my daughter is in her last week of pregnancy.
Good for her.
It's due any day now.
Good for her. If somebody wanted to kind of visit with you or chat with you, Bob, would you be open for maybe a conversation?
I absolutely would, yeah.
What's the best way for them to get a hold of you?
Well, you can either email me at bob.delong@texcelproperties.com. That's TEXCEL properties.com. Or you can give me a call. I'm always available. I'm always interested in talking about real estate. 303-882-9039.
So that's Bob DeLong down in Austin, Texas. Boy, what a beautiful day down in Austin, Texas again. Bob, thanks for hanging out with us in the podcast. Remember, if you do want to get some information on multifamily financing, send an email to info@oldcapitalpodcast.com, info@oldcapitalpodcast, and we'll send you out a 15-page single-space report about how to finance properties and multifamily properties throughout the United States. So again, Bob, thanks for being on the podcast. I'm Paul Peebles. Have a great day.
Thanks for listening to the Old Capital Real Estate Investing Podcast. please join us at oldcapitalpodcast.com to sign up for our weekly email updates. We'll see you next week for another great interview.